What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you from cloudy, semi-rainy Los Angeles, California. Tonight we're going to be talking about AVCT per request. The analysis on this video is actually going to be a little bit different from the rest of the videos, and the fact that this is going to include statistical analysis and technicals. The other videos that I've performed for you guys have been just technical analysis, but AVCT is kind of a tough one, so we're going to include some stats in this to see if we can get an edge for the coming sessions. Anyway, let's go ahead and start this thread here. You know, that's usually something that I actually say on Twitter for a thread, but you got to bear with me, guys. I'm still getting used to the YouTube platform. But yeah, so we're going to be looking at the 5-day first, right over here. So we are in a descending channel. This descending channel is, I don't know if you've seen other videos of mine, but descending channels usually present the opportunity of a trend reversal. Now, we are looking at the 5-day here, so it's a pretty large time frame, so we are likely going to be in this for some time, especially since the 5-day is showing that we've only touched 2 tests of the resistance from this channel. And we are currently near the bottom. It looks like we actually pierced through the channel and then recovered it. So this is quite the price action for AVCT. AVCT is actually not even that old. It's been around since about, I think, August 2017 at IPO. And we don't have that much information or that much historical data to be able to backtest, but it's going to have to do for now. So let's go ahead and look at our BBWP index. So this is the volatility index, and volatility is represented by this indicator called BBWP. This is something that I use in order to gauge how volatile or how momentous the price action can be in a certain period. So the 5-day is actually approaching. It is in an expansion phase, and it is at about 87%. So that's pretty high. The stats performed on this particular time frame are the iterations to where this spectrum line, you know, orange, green, yellow, it shows green down here, sorry, where it has crossed above the moving average. So in this case, we have crossed above it, and the stats based on a cross above the moving average lead to an 88.89% upside hit rate over the span of about 59.6 days, with an average upside thrust of about 27.28%. This is proof of work right here. Now, the iterations that have happened thus far are 18 total, and 2 of them so far have been incorrect, and 16 have been incorrect, which is, you know, hence the 88.89% upside hit rate. Now, that may not always play out the way that we want it to play out, even if we're sitting at the bottom of this channel right here, and this is why I can say that. If we pull up a stochastics momentum or a momentum oscillator, this paired with the BBWP, in this case volatility versus momentum, we can actually see that momentum is suggesting downside still. Now, it is approaching oversold levels here on the 5-day, and it's still, you know, if you can see down here, we still can fall. we can go a little lower. So, and what's happening here is that this could very well be the third incorrect iteration of moving upside the moving average. Sorry, guys, shouldn't have drank so much water. I'm suffering a little bit here. But yeah, like I said, this could very well be the first incorrect iteration. We can always move into smaller time frames to be able to tell how accurate this move can be, and we will get to it later. But I do have the daily in mind. We're currently on the 5-day right now. But these are the iterations that have happened since. Let's see, the first iteration actually happened in January 2nd of 2018, and from there I made sure to count the duration of time, also the upside thrust per iteration, and the count of correct versus incorrect. So I still want to be able to touch on the daily about this, but anyway, let's take a look at the notes right here and see how we can move along. Just to give you guys some ideas here, okay? One of those iterations, let's choose a small one, so then you guys could see just how much it can vary, and it is an averaged mean what we're looking at. So, for example, here in 2019, this let's see, the beginning of the signal happened on July 10th, 2019, right down here, and it ended August 19th. So this was arguably just over a month, and we moved 1.05% to the upside. Now, our previous iteration, the one that we just experienced, which is around here, had a 297.21 upside thrust, and that let's see, it was over the span of August 9th to August 30th. So it was just a couple weeks. So just so you can see how powerful these moves can be. What I'm trying to say here is that the incorrect iteration can be validated with a continuing downward trend of the stochastics momentum, which is similar to RSI. If we continue to the downside and this continues to expand all the way up to its extreme levels and starts printing these red bars, that means that volatility is loading up for a pretty significant move. And we'll be able to validate that only with time. So I would really, I mean, honestly, I would prefer for us to fall into the deeper areas of this channel so that we can really accumulate down here and absolutely rip, similar to what happened here. In that case, we can see some serious gains for literally a swing trade that can last, I don't know, just a couple days, maybe. Just a few days, maybe 5 to 10 days. Now, I have mentioned before that small caps, micro caps are usually something that I don't like to hold overnight because it presents extreme dangers. You know, there's a lot of unpredictability within these small caps. A lot of people tend to call them trash, but this is what I trade. This is what I usually like to be involved with. So let's take a look at the notes here once again and see the potentials. Okay, so the potential of us falling a little bit lower, considering our indicator suggestion, could be down to the $1.32.34 level, around there. Excuse me once again, you guys. Man, I really drank a lot of water. I shouldn't have done that. Okay, so now let's go ahead and move on. I want to be able to show you guys an 8-hour chart. And also, I'm sorry that this is a white screen. The stats performed on this were when I was using a white screen, and then I usually used the white screens before, but I feel like the dark screen made it a little easier on my eyes. So let's go ahead and move on to the next chart, and this is the 8-hour chart. And as you can see here, we are also in a smaller descending channel. No, I'm sorry, I take that back. I want to show you the 8-hour chart of the same descending channel so I can give you some perspective. Now, let's see. It looks a little bit different than the 5-day, doesn't it? And the 5-day, let's just go ahead and go back to it one more time. The 5-day is presenting two tests, like we mentioned at the beginning of this video. We have test 1 and test number 2, and let me get the indicators out so that we can make this a little wider. Yeah. So as you can see here, we actually have in the 5-day, the price action that happens within smaller time frames, it looks different because, they're smaller time frames. They can peak at different levels. So we're only seeing 2 tests here. But if we move on to the 8-hour, looking at a test right here as well. So now I think I haven't validated this yet because I still have to perform the statistical analysis on a daily. But what I'm feeling here is that, I apologize about that. What I'm feeling here is that this is in fact the chart that we've been trading and not the 5-day. And the reason why I say this is because the low that we just touched, the new 50, was this the new 52-week low that it made? Yeah. The new 52-week low that it made at 104 fell perfectly in line with the low that we had back here in December 6th, 2021, which was, arguably the beginning of this descending channel. The price action on October 11th, 2022 confirmed that this is that channel. We need at least 2 touches of the resistance and the support in order for us to be able to validate the formation. So this price of 104 or 103 low was not a random price. It was actually lining up. It was lining up with this price action here from literally 2 years ago. So this is a long-standing descending channel, and it's likely going to take us some time to be able to get out of here. But the reason why I'm mentioning that the 8-hour is giving us 3 tests, this being one. Let me go ahead and get a drawing tool, right? This being one. We have number 2 right here and number 3. Now, if you guys remember, I always mention the golden rule of 3. Every time we hit the 3rd time and reject, we come back into reaccumulation, some sideways trading before we go up again and actually try to break out on the 4th time. Now, upon the breakout of the 4th time, we have to impulsively move up to the upside just like these and come back to the newly converted resistance into support, tested before some upside. So yeah, this is a very bullish setup, and especially that it's been let's see, it's a 2-year-old setup. We're shy just a couple of months from it. It presents a higher probability of breakout. So let's take a look at the notes here, guys. Sorry for that. Okay. All right, perfect. So now let's go ahead and move on to the daily chart. This is the one that I've been talking about. And in the daily chart is particularly where I feel we should make some statistical analysis. How? Using the ARC BBWP, which is an indicator that can be available to you for free alongside the ARC Relative Index, the ARC RSI. When you acquire the Crypstex ARC-Series indicators. Hold on just a sec, guys. Okay, now the reason why I want to pull up this, the BBWP on the daily, is because we are starting to contract. Let's go ahead and make this bigger. Okay. Our expansion phase has topped out at, let's see, man, within the 90 percentile. So it looks like we probably touched 97%, which is pretty damn high. That's a lot of volatility loading up. And another fact that we can look at is that we are now making a cross here. So the spectrum line is about to cross the moving average to the downside. Now the downside, this is a contraction phase starting right now. So BBWP is not suggesting price action upward or downward based on its bias and direction. So if it's going up, if it's expanding towards the upside, that doesn't necessarily mean that the price is going to go up. Likewise, when it's going down and contracting, that doesn't mean price is going down. It has an expansive level and a contractive level at the bottom in order for us to gauge volatility. So volatility can actually have a dual bias, so it can go up or down. So if we reach down these levels here, and our stochastics momentum or our momentum oscillator suggests that we're going to go to the downside when it's at like overbought levels, when this starts expanding towards the upside, our price action will go down. So now in this case, let's go ahead and pair the stochastics momentum oscillator so that we can be able to gauge a direction in price. So let's just change the colors just a little bit. It looks a little too dark with that blue. So in this case, we can see that we're starting the contraction phase, and we can see that stochastics momentum on the daily is starting to curve to the upside. I can't tell if we're gonna in fact continue on to the upside, other than our indicator suggesting an upside, and it's because I would like to perform the statistical analysis on the iterations of how many times we've reversed from the over 90 percentile. So I would take a trend line and back test this by hand. So this would be iteration 1. This would be iteration 2. Is this above 90? Yep. This would be iteration 3, iteration 4, so and so on. So I would, mark these one by one to the precipice of the ticker, to the beginning of its public trading, so that I can be able to get the averaged mean like we did before, the duration of time, the upside thrust, the amount of iterations correct versus incorrect, and that gives us our overall mean, and it also gives us a chance to be able to discover entry zones. So in this case, we are on a daily here, and it is suggesting upside, meaning that we've possibly reached a total of volatility around 97%, and an impulsive move may be on its way. Now, we can further validate this with other indicators as well. Let's see the notes. Okay, so yeah, let's go ahead and do that. Let's go ahead and grab a bias and direction, and we can do that with RSI. Okay, so first of all, let's look at the immediate short-term stuff, and we'll continue going upward because, as we've seen, the domino effect tends to work influenced smaller to greater. So meaning that the 5 would influence the 15 to 30, 15 to buy hour, or 30 to buy hourly, and so on. So now the 30-minute is suggesting upside. We are within a bear weakness here. Again, if you guys haven't seen I know I'm going to have to repeat this a whole bunch of times, guys. Sorry if you already have heard this, but I have to for the newcomers. So this, we can separate, this is the ARC RSI. This is an RSI that I built based on my metrics. We have a center point that's about 50%. We have this red line here and this green line here. Now, this half of the RSI, it signifies bullish control zone, or identifies the bullish control zone. And this bottom half that's right, it identifies the bearish control zone. Now, the bearish and bullish control zones are separated by 2 areas: bear weakness and bear strength, bull weakness and bull strength. So if you hear me mentioning within bear strength or bear weakness percentile, you'll know what I'm talking about. So let's move on. The 30-minute RSI it's featuring an upside pivot, and it's within bear weakness. The moving average is coming down, and it looks like it's poised to make a bullish cross. Let's go to a smaller time frame and see if it's suggesting the same thing as well. Sorry, you guys. That's my toddler right outside playing with my wife in the living room. All right. You hear that little guy there? He's going wild. Sorry about that, you guys. Anyway, so the 15 has already made its bullish cross. We are above the 14-day moving average in the RSI, and it's within bear weakness, so this is likely to go up. It is following a trend as well. But let's now look at the buy hourly right down here. The buy hourly is not giving us an edge. In fact, it's barely giving us a downside edge. Usually these when these signals are kind of flatlined like that, I don't like to trade them. So let's look at the hour to see if it gives us a bias in direction. The hourly is, oh man, this is very within the very shallow zone of the bear weakness. So it is suggesting an upside. However, the pivot is very, very small. Let's continue to larger time frames and see what we can come up. See what we can come up with. Okay. Again, with the flat lines right here, look at this. It's barely giving us an indication to the downside. This is the 6-hour RSI. The 4-hour RSI. The 4-hour RSI, it looks corrective in a sense to where the RSI is facing up, and it looks like the RSI signal is starting to be influenced by it. Now, we are to its credit, it is within the bear strength percentile. So this, I'm not sure that I can give this much weight, the upside move here. I think that this may actually end up correcting once again to the downside. Let's look at the 12-hour. Okay, the 12-hour is also giving us a flat line. That's really unfortunate. Let's look at the 8-hour. 8-hour is a very weak downside pivot. This can, the moving average is also straight. This is usually, okay, what my mentor ended up telling me one time, guys, that I'm going to continue to share with you guys as we make these videos and make our analysis, is that he said, if you don't see your edge in a trade, if you can't find your edge, then simply don't trade it. And he also said, the best way to make money sometimes is to keep it, right? So in this case, we're being presented with a lot of blockage here, a lot of indecision. And I can see the clear moves are actually within the smaller time frames. So, you see you have the 30-minute here suggesting some upside. Now, the upside may not be too long of an upside because of this moving average. It can use it as a resistance and continue to the downside, which is really unfortunate. We can actually pull up, we can still pull up some other tools. We can actually do that now. Let's grab some of the ARC-Series indicators from Crypstex. This in particular is Sniper. I'm going to go ahead and that's what Sniper looks like when it's on. It's a trend-based platform with a VWAP built into it and automatic trend lines. It also is supported by Bollinger Bands as well. Now, in this case, we are seeing that it's drawing for us a type of symmetrical triangle right here. The red line is going this way and the green line is going that way. So we're in some type of symmetrical triangle within the 5-minute time frame. Now, this does have, in a sense, buy and sell signals, or you can see a long signal, you can see a short signal here. We have a long signal, it went up, short signal went down. Now, these indicators are not always, dead on and dead right, but they do present a good idea as to where we may or may not be going. So the 5-minute is giving us a short signal, signaling a downside. Let's go to the 15-minute and see what it's suggesting. Okay. The 15-minute is, I would assume that it would give us a long signal. It's giving us a long signal, and it still has not corrected it. It has not given us a short signal, and that's particular to the RSI. We were looking at the RSI on the 15 minutes suggesting upside. So this is also suggesting some upside. Now let's look at the 30-minute and see if it suggests upside as well. Yep. Just like we saw on the RSI of the 30-minute RSI. Let's go ahead and change it to the 30-minute. The 30-minute RSI is also suggesting upside. So Sniper is giving us a long signal right here and continuing. Now, it's giving us a long signal with a trend. So if we were to face a corrective move in the immediate short term, it could be down to the 160 level before facing some immediate short-term upside, likely to be rejected at VWAP at around 169. That could be a stop number one. Now, if we're looking at basic price action, sorry for the white screen, you guys. I know that's changing our dynamic a lot in here. So let's go ahead and take out let's take a sniper off and just look at some basic moving averages. I know I have to adjust the moving averages on this because some of those trend lines are just a little bit too big. So let's make them bright so we can see them, right? We're going to pull up the simple moving averages. We're going to be pulling up the 10-day, the 50-day, 100-day, and 200-day simple moving averages to see where we are currently sitting. Okay. Okay, so we do have some resistance coming up. This is the 10-day moving average, and the reason we can tell is the 10-day is because it follows price action a little closer than the other ones. This is the 50-day moving average. Dark blue is 100, and 200 is here. So, trading below the 200 is actually not a good thing. But let's look at what we're facing in the immediate short term. We have resistance right at $1.63. If it wicks up, we can see some resistance at the $1.65 level. VWAP is suggesting $1.69. Let's turn on Sniper one more time. Yeah, the VWAP is suggesting $1.69. So we have three areas of resistance. The most, in a 30-minute time frame, I think the most likely scenario would be stop number one here at the 100-day moving average and at VWAP at about 169 before facing downside. Now this is absolutely day trader territory. This is momentum trader territory, and particularly short sellers. Why do I say that? Is because they can start averaging in starting at this point right here. This is going to be entry, short position at $1.64, possible 25% portfolio, followed by another maybe 40% portfolio at $1.69. And then we can continue our descent. And the descent could, let's take Sniper off. Our descent could actually, I don't think that they would start taking profit at $1.55 at the SMA 50 at the 50 day, but this is possibly an area where they can remove some risk, or we pierce through this area and then come back up and test the 50-day moving average as a confirmation of resistance before continuing to the downside, and potentially to if we're looking at a range and raw price action here, this is the technical analysis side of what I was talking about earlier. We're looking at a first stop at about, it's actually this could be, it's a range, it's a support range. I'm going to show you guys why. So we have too many areas that are very close to each other. So it would be down to the 133, 134 level, and we can bring this up to right about here. I'd say just above that big green candle here, to about 139. So this is a support range right here. The reason why is because we have significant support, all over this right here, this wick low, at the 133, 134 level. And then also the fact that we are looking at a small gap. Gaps don't always have to be filled, but we do have to keep them in mind. Sorry, let me go ahead and make an adjustment to this, including the gap. So 142, between 142 and 133 could be a take profit zone for short sellers. And the gap in particular, since we're already headed down and we have the SMA 100 and the SMA 50 acting as, you can see right here that we've been touching those on the way down. They've assisted the price action on the way down. So we can only assume that this can face rejection at these areas right here, we'll start to pierce through the 50 and use it as resistance, and then continue onto this level to where we can potentially bounce first at $1.42. We can see price action sit here. We can even wick down to the 133, 134 level, thus covering and clearing this gap here, which is between 140 and 142. Clearing that gap would then create a resistance level for us to start touching and touching and touching, and hopefully we don't, fail it. But like I said, the daily is preparing for an upside move. So this area down here could likely be our supply zone, or sorry, the demand zone. So in here, long accumulation could happen. So if you're going to go long the stock, it would be around this area here. So and also, if I'm remembering correctly now, let's go back to our heads up, guys. This is going to be a white screen right now. If we go back to our descending channel, particularly on the 5 day, sorry, this is the 5 day. The 5 day channel has a low that we talked about of 133. So this support is also, it shares confluence with or is confluent with the support range that we're talking about. Where the hell is it? Right here. There it is, 133. So looking at things like this, it's really when things start to rhyme, that's when things are looking good. So let's take a range low fib to the range high inversely, and let's see if we can get some rhyming here. Okay, so our 1.618 is it's pretty much smack in the middle of this support right here. So, and also our range low 1 fib is also confluent with our 50-day moving average, and the resistance levels that I was talking about, the SMA 100 being one of them, and the SMA 10 are falling right within the 786 fib. And now let's pull up Sniper one more time so we can see VWAP. VWAP is very confluent with the inverse O spot 618 at 169. This is direct confluence, which makes me feel that we are for sure going to see a move to the upside, and it's going to possibly cap at $1.69 before we come back and start testing these supports. 147 is the first stop at the bottom, alongside the SMA 50 at about 156, before continuing down to here at first 142. If we have enough time in the session, we may even test a 136 at the 1.618. So the 1.618 and the not 618 are the golden ratios of the Fibonacci retracement tool. Those are areas where humans usually like to, where actually humans. Let me use a better wording. It can be where the mass sentiment likes to go, if that can make any sense, you guys. So if you want to trade this, please remember, you guys, I have to always say this too. I'm sorry, but I'm not a financial advisor. I am not suggesting for you guys to buy or sell any asset. Please use anything that I say as a form of entertainment, and yeah, jibber jabber, right? So if you guys were to day trade this, I would suggest, I mean, if it were me, I would start opening up long puts in these areas right here, the 169 area. If like this would be the area where I would start to open long puts, so that I can be able to trade the range all the way down into the 140 141 level, where I could just liquidate or cover the position, liquidate the position. So only because you're opening long puts on the stock does not mean you are short the stock. Hence the word long within put. So you are paying for a long position. It just so happens that you're paying for a long position that is betting towards the downside. But when you short a position versus longing in a put, that is very different. They're actually inversed. So anyway, you guys, that's going to do it for the video tonight. If you have any questions, please don't hesitate to reach out to me on the Discord server. I'm going to leave the links to the Twitter account in the bottom. and alongside my trading platform. And again, if you guys have questions regarding the ARC-Series indicators like Sniper, and this is the ARC Whale Spotter, please send me some messages. I have already had some inquiries regarding it, and thank you so much for doing so, by the way. But yeah, I wish you all tomorrow a happy Sunday and a happy rest of your Saturday night if you're near my time zone. But again, you guys, thank you so much, and I will talk to you soon. Adios.